It is Monday, April 13th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very interesting No Jiu-Jitsu Get Your Ass Kicked at Jiu-Jitsu Monday. One of these days that's going to straighten out. Not quite yet, but soon enough. I don't know. I did quite a bit of stuff today as far as workout, though. You know, I didn't let the exercise go to complete waste, or let myself get out of condition. And I don't know. I'm like halfway good, halfway bad. I feel like I don't get as long a workout, or I don't work out as hard as I would if I were in a classroom full of people and they were trying to strangle me or something like that. But I do feel like I'm doing more than I would have if say I just started jiu-jitsu. So I know I'm not all the way back to square one or anything like that. But yeah, so I did a lot of rolling around and a lot of the singles drills kind of stuff, and trying to get a little innovative in how I'm moving too. And I'm finding that there are spots in the way that I like to move that are a little bit different than the totality of jiu-jitsu. And it's like, I don't know how to explain it. Like, I've been doing jiu-jitsu for quite a while now, and so I'm kind of like falling into the mental patterns of the movements, as far as like feeling what's an efficient movement, feeling what's a tight movement, or the best way to pass and stuff like that. And so I'm feeling that stuff in my movement. And so when I'm examining movements to do that they're demonstrating in class, I don't know, I think it's because of the exterior perspective that I'm able to see it a little bit differently. And I was talking about this a long time ago with regard to jiu-jitsu movements, and where I feel like there's this thing, I call it the wind, where there's a natural flow to a movement, in jiu-jitsu especially, and things like Tai Chi, you feel it a lot, and also in like yoga. But in a lot of martial arts, there's a flow to it. There's a flow that's derived out of efficiency and the movement itself. I don't know how to explain it. Like when you're swinging your arms, you can feel like the how do I express that? The effect of gravity on your hands when you're doing a movement or something, or when you're shifting the weight of your opponent or something like that. You can feel the effects of gravity on the person. And so when you're going through a movement, you're displacing the weight. You're shifting the weight from one position to another, either by their attachments to you or your attachments to them. And so, like in jiu-jitsu movements, there's a flow to them. There's a it's a flow. It's like it's supposed to go that way, kind of thing. Where if you take your hand and you put it on the outside of somebody's right knee while you're pushing them toward the right side, they're gonna fall on their ass. And there's a flow to it. When you got the grip on the left collar and you're swinging your right elbow in across their chest as you're bringing your weight across the right side. There's a flow to it, And when you land and you're on top of your opponent, there's a certain range of area where you're going to be contacting your opponent, And so it's like there are certain progressions that go with the wind from there, that'll navigate around to things like arm bars, arm triangles, leg triangles, and so that's the way I view jiu-jitsu, or I always have, that when I'm doing a movement right and I'm doing it tightly, there's no getting back any inches from me. It's like if I manage to stack you up a little bit, when I'm trying to pass your guard and you got me in full guard or something like that, I don't give that back. You have to, like, pop your shoulders up or whatever so you can get a few inches back from me there. You have to do the effort to do that. And I like to not only take away that area, but I also like to try and negate your ways to get it back. And so, like, today they were reviewing a I don't know how to explain that. It was Guard Pass, and it was from it was like a bullfight style pass where you've got both of your opponent's legs in front of you, and you're trying to shift them either from one side to the other, or you're trying to get your leg in between them so that you can cut across the front of one of them. Either way, you're trying to get to a more dominant position and get around the legs, right? Well, I was watching the way that the instructor was describing how to go about getting around it. And in this position, your opponent is flat on their back. They've got their legs up between you and them, and you're in a bullfight position. You do a leg drag. So you grab, like, say, the right leg with both of your hands and bringing it up onto the right hip, right? So this already negates the left foot because it's on the bottom. It's underneath the right foot. So I'm looking at it and I can see that your opponent will maybe have the right hand. So if you can either grab the right sleeve and pull it outward while you're trying to do your pass, that would be a good way to do it. But the instructor was suggesting grabbing the belt and pulling yourself really tight into that hip, and then putting your head on the other side of your opponent. Now, I thought this is great because you got your opponent completely flattened out, almost in a chiropractor position. Their right hip is completely negated with your weight. And I was thinking, from that position, you got a good grip on their belt or on their opposite hip, maybe, from underneath, is to take the right hand and put it on that knee, that outside knee, and take your right shin and put it up on that thigh, and then hook behind the knee, bringing the knee, hook with behind their right knee with your right foot, so that you're bringing your leg over the top of their leg, and you're hooking at the knee. And so that really, I think it would negate a lot of the ability to either right the hips, or even reorient the hips, and even a lot of the ability to, like, shrimp out of a position like that. So I don't know. It was just a minor thing that I saw today, but it felt like it was with the flow. I was watching the instructor do it, and then I was kind of pantomiming it and whatever. And I recall a lot of the situations where I've been in like that, where I have tried to get around the legs, and there were certain things that the instructor either didn't mention or omitted, that it felt like they would have been present. And I think it's one of those things you can't fucking notice unless you've got somebody actually trying to retain their guard or trying to retain their legs between you and them. And one of them is things like pulling down with your heel. With your kind of curling your hamstring and pulling your heel down. Well, your dummy doesn't do that. And so if you're trying to do a pass like that, there's certain things that being able to doing that, curling your hip, your heel in like that toward your buttock, kind of changes the story. Especially when it comes to guard passing. I tend to let people stack me a little bit too much, but it's because I want to push them off to one side and try and pull them down. And I've only succeeded at that once or twice. A couple times that I've gotten in that position, I've secured a really good triangle. But it was only because I remembered how to do the whole thing. There are like certain spots in a triangle. I always mess it up, and I always forget to do it, and then I end up messing it up. But I have caught it a couple times where I got that bad boy in there really tight, got the top of the fucking shoulder pulled tight. You're not going to get it back, and I kind of twist over, and that's that. Scissor up. But anyway, so yeah, I'm trying to get something in with the time. And it's funny because I don't give myself as much break as I get during class, and so the sessions that I do are a little more intense for the period wise, but they're not as long as they need to be. I need to be doing like an hour or so, at least, to be able to keep my durational ability up. I feel like I'm definitely going to be cardio tapping for like the first month or two of coming back, because I don't care what you say, man. There's just things that you cannot replicate with a fucking dummy, and one of them is the pressure of 100+ pounds pressing down on you, or trying to grip your neck, or grip your leg, or your arm, or something like that. Anyway, let's go ahead and throw down with some music, because I haven't the slightest clue exactly where we're going to go today on material-wise. But you know me, I'll figure it out. I always do. But as far as where we're going to start with music, it's going to be body count. And we do have quite a bit of stuff to reach there. It seemed like today was kind of lackluster. It was kind of a smear of Sunday came right into today. I got a little bit of the stuff done that I need to catch up on, and that was a good step for me. I think that if I keep on the pace that I'm on, I'm definitely going to get everything that I need to get done between now and when it absolutely has to be done. And that's the best I can expect at this point, man. Anyway, let's go ahead and throw down with some music. And as far as body count, the first dance that we're going to go with, let's go with Point the Finger off of Carnivore here on Coin Metal. And that was Slayer with Warzone. Yeah, my program seems to have hung up for a moment, but I suspect it's continuing on. Feels like it anyway. Oh, let's see here. So as far as what we're going to get into today, I was just reviewing some of my social media here. I swear, man, every time I look at Neil Kashkari, that guy looks like some, raging jihadi. I'm sorry, every time I look at him, I want to put a turban and a beard on him, and he looks like Osama bin Laden. But that's just my associations, I happen to be paying attention back during the War on Terror. And so, yeah, guy looks like Osama bin Laden to me. Anyways, as far as what we're going to get into today, it seems to me that there's a lot of the regulatory apparatus out there is meant to try and pick winners and losers. And I keep talking about that on this show, and I think we're going to see a big example of that taking place over the next couple months, with regard to how the economy expresses its response to this whole shutdown business. See, I've communicated it multiple times on this show that I happen to believe that the root of the issue happens to be economic and trade related more than anything. That the things that would supply our businesses are being denied us because the prices that are being offered are not sufficient to compensate the people that actually manufactured it. And I know we thought that we might be able to continue to tread along in print, or at least somebody thought that we'd be able to continue to print and that everybody would be accepting the US dollar on the face value while we're doing all kinds of other things that are ending up in the news. And it's too much to expect that people won't react. It is too much to expect that they will let their monetary value be sitting idly by and funding things that they do not believe in. Or worse yet, things that are actually harming them in some other way. Either socially or economically or, politically. And they'll look to divest themselves from those noxious interests and try to support interests that are more in line with their own. if not just assuming the role that they were that they were trying to replace with the proxy. And this whole balance of interest in exactly who has it, I really believe that the next decade is going to be a exquisite example of this. That we're going to find out the actual limitations between the physical and the digital, because there are plenty. We can affect the physical with the digital and conversely, but that there are limitations to how much we can before we've harmed the rest of the market for the interests of a minute number among us. And I really believe that we're coming to a point where we're reevaluating exactly whether or not it's worth it to subvert our own interests for the interests of these few, especially when we're seeing how their existing control of the market actually expresses itself in their management of monetary policy and things like that. I think that we're coming to a point where it's like these people have abused their position in the market too long, and that a lot of the market is just going to shift around them. And it's like a rock in the way of a river. The river's going to find a way around or displace the rock, or it's going to not tolerate the rock being there, and especially if the rock isn't actually helping it. So, anyway, as far as what we're going to get into, I got this first story here. It's on CoinDesk. Exchange banking on tons gram tokens to shut down after Telegram court order. And this is authored on April 13th, 2020 at 1742 UTC. And as far as who wrote it, that would be Anna Baydakova. So no penis. Black Moon Crypto, an exchange that aspired to be the first to sell Telegram's blockchain tokens, is closing, its CEO told CoinDesk. The news comes weeks after a court order put into doubt whether grams would be issued as planned at the end of April. Black Moon touted its relationship with investors in Telegram's upcoming blockchain last fall, shortly before the U.S. Securities and Exchange Commission, SEC, filed suit against the messaging platform in October and secured an injunction delaying gram issuance by months. However, Black Moon CEO Oleg Sadak told CoinDesk high regulatory compliance costs were the reason for the exchange's closure. After in-depth analysis, we concluded that running a crypto exchange in compliance with all modern European Union regulation, including the 5th Anti-Money Laundering Directive and its licensing requirements that are constantly changing unpredictably and unfavorably, is not competitive to unregulated alternatives that are available in the market at the moment, Sadak told CoinDesk in an email. Now, if you listen to this show, you have heard me say this multiple times. This has been the effect of quote-unquote regulation pretty much everywhere. And the thing of it is, and this is the big thing, not a single one of the banks operating out there in the legacy markets are capable of being compliant with these anti-money laundering directives. If they existed in the regulatory realm that cryptocurrencies do, all of them would fail. Every single one of them. They lose their fucking licenses tomorrow. If all of their shit was tracked on blockchains, they'd all be out of business tomorrow. Every single one of them. They'd all be kicked out of New York. The NYDFS would kill all of their licensure. All of their insurers would cut ties with them. And they'd be left floating. All their customers would be fucked. And I think this is one of the reasons why we haven't seen as big a jump for private entities into cryptocurrencies as we would expect. However, I believe it's because we're coming to a point where our regulatory burdens that we're currently trying to enforce, all the frameworks and shit, they're taking out so much value out of the existing economy, both in material and just intellectual property form and production capacity alone, that it's harming the greater economy. And I think that, we're coming up to this issue with regard to China and the lack of ability to be able to just ship all the shit 8,000 miles across the ocean. And, that I believe that's coming to an end. The energy required to do it, to transport the shit is prohibitively expensive. And especially when you consider things like 3D printing. When these things take away the necessity to be at any one place at any one time to do any one thing. At least when it comes to manufacturing. Continuing on. Let's see. According to a user, the exchange sent an email last week announcing the closure. All withdrawal limits have been lifted and fees have been canceled. Holders of Black Moon's own BMC tokens sold during a $30 million initial coin offering ICO in 2017 will be able to convert the coins into USDC. Oh shit, USDC stable coins. Oh my gosh. They're going to give their money to fucking Goldman Sachs. Quote, "We will release the converter by the 24th of April and will inform you accordingly," said the email, which was shared to CoinDesk according to SADAC. "Withdrawals will be processed automatically for the next 3 months," quote, "and after a long period we'll be considering all requests on a case-by-case basis, i.e. the rich people will get their money first, and then maybe you get yours." The user, who asked for his name to not be published, said he invested 34 Ethereum in Black Moon's ICO in 2017 when Ethereum's price was as high as $311 a piece. So he's losing his ass. Quote, "I saw an opportunity in future asset management project in the cryptosphere," the investor told CoinDesk. Quote, "Later I followed the cooperation with Ton, Graham, and was additionally positive about it. Now the investor is worried whether Black Moon would make the BMC into USDC conversion transparent and fair to investors. I will say no. Quote, "The BMC/USDC conversion rate will be flexible and depend on the amount of requests and outstanding reserves," SADAC told CoinDesk. Great expectations. Black Moon Crypto is registered in the Cayman Islands, and was initially a marketplace for Ethereum tokens backed by shares in mainstream companies like Lyft. Last summer, it boasted a modest 3,800 users, but hoped to boost this number dramatically with a unique offer. As soon as Telegram's Ton blockchain launched, Black Moon planned to become the, quote, "first marketplace for its tokens, called Grams." I'm going to create a monopoly for my own coin. The exchange partnered with Gram Vault, a Swiss custodian founded especially for holding yet-to-be-issued grams, and that it had some big investors in Telegram's Ton $1.7 billion token sale as clients. Black Moon Crypto was also working with Ton Labs, Telegram's unofficial technical partner, and was affiliated with the Cyprus-based lending marketplace Black Moon Financial Group, founded in 2014 by Ilya Perekovsky, who later became the Telegram vice president. Black Moon had been hoping to boost its Gram liquidity by pulling tokens directly from Gram Vault, under the belief it would hold a significant number of tokens once investors received their allocations. However, the issuance of Grams has been indefinitely postponed. On March 24th, the New York court supported a U.S. Securities and Exchange Commission (SEC) lawsuit against Telegram and ruled that grams should not be issued. Yeah, it's not really their fucking call. Purely venture stuff. A Black Moon ICO investor who spoke to CoinDesk under the nickname Eric Idoson said he used to hold Black Moon's tokens but sold them in November. Quote, I guess the situation with Ton morally hurt them, as both the leadership and developers of Black Moon have been seriously involved in it. He added, quote, they probably decided to freeze all activities for now. Black Moon has created, quote, many good tools for traders, but later Binance did the same and obviously prevailed. Idoson said, they are good guys, not scammers at all, but you need to understand that it was purely venture stuff, he added. Their main problem was the lack of liquidity, a typical issue for new platforms. Another former investor said he sold his tokens back to Black Moon, and his friend used the platform's investment products. Neither yielded much profit, but everything was organized properly, he said. In general, it worked pretty normally. Normally stuff like this works normal until it doesn't. You know, you try and log on to your exchange account in the morning and you can't fucking do it. It's not there anymore. You know? And then you look at your social media and everybody that you knew that was invested in it is like, dude, we're completely fucked. They took our money and ran. You know, this is one of the problems, and I argued vociferously against ICOs in general. And it's because all of them, every single one of them, if you read their white papers, were anticipating the custodial burden and the regulatory burden that would be put on them because of their custodial nature of their project. This tells you that they understand the risks, and they're going forward anyway, understanding the risks, and they're hoping that you don't understand the risks, or that you'll be investing in them via word of mouth or some other recommendation where it simply just went by your whole due diligence process, where you would be evaluating your investments properly for determining whether or not you expect an actual yield out of it, as you should. And you hand that off to somebody else, and people get surprised when this shit happens. There's a reason why Satoshi Nakamoto started Bitcoin with a pseudonym, and that was the name that everybody fucking knew him by, and that was it. There's a reason for it, and it was so that he could launch it and say, yo, take this thing. And that immediately alleviates him from any responsibility, because now it's up to you. Now you have to be the one to say, you know what, I think I will download that source code, and I think I will run it on this machine, because I believe in that project enough to dedicate this machine and the bandwidth and the electricity to run the machine to this project. That's the process that's supposed to be going on. Okay, but things like Ton and their whole ICO launch on Ethereum, on the back of Ethereum, and the promise that one day in some fucking futurescape they're going to shift away and they're going to be their own project and everybody's going to make money. Whatever. No. If you believe in the project, you would be dedicating some fucking hardware to it. That's what this is all about. And trying to shift it all into just some perceptual token that doesn't really mean anything, that's like supposedly got some sort of association, spurious however it may be, to work that somebody else actually did that had absolutely nothing to do with your fucking butt token. And see, that takes the whole interest thing and it just completely throws it up in the air. There's no direct association. The people that are investing in it, they're not actually putting any real skin in the game. They're investing in work that somebody else did, only it's representing some other butt token that could change value relative to the actual work performed at any point in time. You know, it's like this thing right here. It says that they're going to convert the coins into USDC stable coins. Not even US dollars. USDC stable coins. Now, if you know anything about the USDC, you know that it's issued by Circle, which is owned by Goldman Sachs. So these are Goldman Sachs tokens that you're being issued instead of US dollars. You're not even getting Ethereum. If you threw down Ethereum in this thing, you're not even getting Ethereum back. You're getting Goldman Sachs butt tokens in exchange for your tons gram tokens or ton grams tokens. So, yeah, and again, they're going to be the ones that are determining the exchange rate. And if you think that's not going to end in a lawsuit or two, you don't know jack shit about finance. Because I can guarantee you, whatever rate they do establish, it is not going to be favorable to the initial investors. They are going to be treated very punitively for their vision and their decision to get into it. And especially with Goldman Sachs involved. Goldman Sachs is going to be like, yo man, this is money you could have given to us through the front door, so now we're going to take it through the back door. And you're not going to have a choice in the matter because we're going to be the ones determining the exchange rate of it. So yeah, good luck, have fun. I wouldn't doubt that at some point in the near future we'll see some sort of crash with regard to the Goldman Sachs stablecoin or some sort of hack, and they won't even have to fulfill on this obligation. Yeah. I could have swore at one point or another there was some talk of issuing USDT on the token, on the ton network. Let me see if that USDT ton network. Let me see if that. Oh, Tron network. Tron. Oh shit. Tether's infected Bitcoin Cash too. Shit. That could explain why it's been tanking recently. Could explain it. I don't know why. I don't know the association that would have that kind of effect on Bitcoin Cash. Although I actually can, if it, thinking about it, it's because if it were my hash rate, I wouldn't want to be dedicating it to a network that's supporting Tether in any way, shape, or form. That includes Bitcoin. So yeah, I could see some miners saying, you know what? I would rather mine Monero because they are not issuing fucking Tether tokens on the fucking Monero network. Not yet, at least. Hasn't been infected with it yet. Anyway, I got this thing here. It's and this is another danger point. This is on CoinDesk.com. U.S. Treasury approves Square as coronavirus stimulus lender. This is on April 13th, 2020 at 6:08 UTC or 1808 UTC. And this is by Lei Kewen. So no penis. The Bitcoin-friendly company behind Cash App, Square, announced Monday it is participating in the U.S. government's Emergency Paycheck Protection Program. This $350 billion lending program for small businesses provides loans that keep employees on payroll for at least 2 months as part of the $2.3 trillion stimulus package approved by Congress. PayPal and Intuit, maker of QuickBooks, are the other fintech firms included in the program. And we're going to right-click that because they've made it a hyperlink. Jackie Reeses, head of Square Capital, tweeted that Square will work with Salt Lake City-based Celtic Bank to roll out the lending program this week. Quote, "We will notify sellers when their application is available via Square Dashboard, starting with employers whose application data we can verify automatically," she tweeted. And let's read that tweet. It says, "Jackie Reeses, we know sellers need financial support now more than ever, and we're committed to making funding accessible as to many small businesses as possible." Let's see here. Last Friday, Square founder and Twitter CEO Jack Dorsey tweeted that Cash App offers routing numbers so people who don't file tax returns can still accept stimulus checks. This long-standing feature has been used since 2018 to accept direct cash deposits from employers, even for those without a bank account. Although the publicly traded Square has yet to release revenue statistics from Q1 2020, it would be surprising if Cash App didn't profit from the surge in speculative Bitcoin trading in March. Bitcoin sales accounted for nearly half of the company's quarterly revenue in Q4 of 2019. Last year, Dorsey said he wanted to help Bitcoin achieve, quote, "currency status." It already has, Jack. It's clear different components of the Square empire will take complementary approaches to fintech. The Square crypto team, a skunkworks unit not related to Cash App's Bitcoin efforts, released an open source Lightning development toolkit in January. Overall, one might expect to see more nimble moves from the fintech giant as it adjusts to users' changing needs during the coronavirus crisis. Quote, "We should always maintain flexibility," Dorsey told CoinDesk late last year. Yeah, so this is them kind of like, I would say, kind of trying to harvest on the moment, you know? But the thing is they'll be lending people their Bitcoin in a way that they could probably just gank it right back. I don't know. I'm not impressed with the whole idea of Lightning and lending people money on Lightning or via some sort of proxy service supposedly in Bitcoin. I think is a dangerous move, and mostly because I think that they'll be using some sort of tokenization thing where they're issuing you like your own token against a supposed amount of Bitcoin that they supposedly own. So yeah, I think it'll be really interesting. These the tokenization thing and second layer shit and third layer shit. I think that that's wherein the danger lies with regard to cryptocurrencies, because the further you step away from the people that actually had to dedicate the hardware, electricity, time, bandwidth to the process of mining, the thicker those dependencies become, the more likely there's going to be a chink somewhere in between where the rubber is and where the road is, where they contact. The interfaces in between, you know, you add layer and layer and layer and layer. You open up the number of possibilities where something could go wrong. You know, where somebody doesn't pay, and then somebody else doesn't get paid, and then somebody else doesn't get paid. But the underlying person, they always get paid. And that's the kind of situation it seems like they're trying to create. But the problem with that is that when those entities are the only ones that are benefiting, it'll turn more and more to where those people are the ones that are funding people like miners. And when the miners aren't able to pay, they aren't able to keep their fucking lights on. They aren't able to dedicate the electricity and the bandwidth to the process. And so they'll either shift it to another coin where they can make a profit, or they'll simply stop mining entirely, both of which are very bad for whatever coin you're on. Anyway, let's go ahead and throw down with some music. As far as where to go, you know, we hardly ever play any Anthrax on this show, and I think it's because it starts with an A. So it's like so far away from everything else that, we're not really in our mind. But yeah, I want to throw down some Anthrax. And there's this song, it's on Worship Music, that I really, really like. It's called The Giant, here on Coin Metal. And that was the Dick Song by Ministry. And so, next up, got a little something here on CNBC. It's really funny. These days, we don't even have to go to crypto-only related websites in order to find stories relating to cryptocurrencies. I mean, we're finding them on Forbes, finding them on CNBC. It's just there. Anyway, so I got this article here, and I think this is an extension of the previous one that we were on. Let's see here. Yeah, just U.S. Treasury, yeah. PayPal, Intuit, QuickBooks approved to hand out emergency funds to small businesses in coronavirus program. And this is by Kate Rooney. God damn. Not a whole lot of penis out there anymore, huh? This is by Kate Rooney, and it was authored April 10th, 2020. So approximately 3 days ago. Continuing on. Quote, after weeks of lobbying, fintech companies are officially allowed to take part in the U.S. government's emergency lending program. PayPal and Intuit QuickBooks announced Friday evening that they were approved by the Small Business Administration to take part in the Paycheck Protection Program. The emergency government loans are meant to help small businesses survive the economic slowdown caused by the coronavirus outbreak. Quote, this is a race to save jobs in the present and for the future, PayPal CEO Dan Schulman said in a press release. Quote, we are eager to deploy our capital and expertise to do our part in helping small businesses survive this challenging period. In addition to acting as a direct lender, Intuit QuickBooks said it would process payroll information which small businesses need to provide to lenders in order to get approved. The U.S. government had asked banks to help it distribute at least $350 billion in loans to small businesses as part of the $2 trillion coronavirus stimulus bill. For weeks, tech-focused lenders had been pushing to be included in the stimulus plan. Financial Innovation Now, an industry group representing Square, PayPal, Intuit, Stripe, and other non-bank finance companies, sent a letter to Congress in March asking that their members be included in any emergency funding. That's really interesting because I'm gonna check into something on this because this is really interesting to me. Quote, small businesses are not well served by traditional financial institutions, nor will existing federal small business loan programs deliver funds fast enough. The letter reads, quote, any federal small business loan program must leverage digital advances in the marketplace to ensure that stimulus can reach those businesses most in need. I don't really think that's the concern. I think it's getting it in the hands of bankers. That always seems to be the focus. Tech companies, including Square and Amazon, have become popular options for small businesses to get access to capital. PayPal said it has provided access to more than 900,000 loans and cash advances, and access to more than $15 billion in funding to more than 305,000 small businesses. Basically, it seems to me like they're playing like a global round of Shark Tank, and they're getting a piece of every company that's applying for these funds, and maybe even 100% stake in those companies. I don't know. It's really interesting, and it'll be interesting to see how this plays out. Personally, I don't believe these entities are going to be able to do any better job in dispersing the funds as any other bank would. And worse yet, I think that they're assuming a great deal of responsibility onto themselves, which for the moment at least they might be able to fulfill upon. But it's the greater issues. It's things like adversarial actors, which we always talk about on this show. They are a perpetual threat. It's not something that goes away just because it's got a government stamp of approval on it. That shit still exists as a threat. And the fact of the matter is that a good number of people have been out there learning how to code. And so being able to intercede and interdict and interfere with these processes once they get enough of an incentive to do so. I think it's funny, people talk shit about Bitcoin Cash because of the recent drop in hash rate. Personally, I would suggest that their recent decision to connect themselves with USDT, that was probably part of it. But as far as how that's going to express in the longer term, I think that once it's becoming apparent what's going on with regard to Bitcoin, I think that a lot of people are still going to shift to Bitcoin Cash. And I think as far as like what BIPs are enforced right now, that itself is going to change. I mean, these networks are consensus networks. That means that the BIPs are the types of transactions that are enforced as valid on the network is the product of the work of the miners. And that could the hashing power could be coming from anywhere. And if it ever gets to a point where we're talking about where we're allowing only certain entities to participate in quote unquote Bitcoin on the mining level, then I believe that the value proposition for Bitcoin will have gone away. And just because somebody else decided to evaluate your monetary worth on the Bitcoin blockchain doesn't exactly make it that. The fact of the matter is no matter what, who's the signatory, as far as like who's the owner of the property that you're sitting on, that's going to come down to who can hold the property. The idea of property ownership is that it's your property. Well, if somebody else renegotiates things on the back end and never makes you privy to the fact that the ownership of your land is in fact changed hands on their ledger, it's the enforceability of their ledger conditions over yours that is in question. And there's a point there where that gets kinetic. That eventually you're addressing somebody that is not willing to give up their land, and they're actually able to retain it. And there's, it's funny, we see that Branch Davidian invasion by the FBI and the ATF and all that. When you look at that, the force was a few men, some women, and some children on one side, and a whole bunch of trained people on the other. And like an overwhelming force of trained people. But what about when it's not that anymore? When the people that are trying to invade aren't as competent as the people that did the Branch Davidian thing. And on the other side of it, though, you have somebody who is tactically aware and logistically capable of defending the land that they're on. What happens then? This is the computer age. Why we're not up in the air already is beyond me. But the presence and persistence of any kind of security protocol that you could be enjoying right now, it has to be maintained at least on a commercial level in order for you to continue to enjoy it. And that's produced by a existing economy, an existing infrastructure. And so, even if you're living behind some big steel gate and you got your gate controllers and you got your video cameras and you even got your drone army and all that other shit, all that shit requires money. See, it requires not only money, it requires manufacturing units somewhere else in order to exist. So when somebody gets smart and they take out a few of your video cameras, well, you don't have a fucking video camera manufacturing unit on site, or at least you most likely do not. And so you're going to have to go somewhere else to get it, which means somebody else had to make it, in which case a factory for it had to exist. And so people with money to buy a factory had to exist. And an interest in making video cameras too. And so, it's where I look at this stuff and I think to myself, it's like, how do these people expect to be able to have so much control over your choices that they can tweak things here and tweak things there and you do what you're fucking told to do, and at the same time maintain an economy where people are interested enough in maintaining it. And even if you were to replace all the manufacturing with robots, you still need people. Because you need people to be maintaining all of this shit. And again, you can program all the fucking robots you want. You can AI all the fucking robots you want. But you're going to continually run into this thing where there's other entities out there that are competing with your interests, and their interests are also in remaining alive and being able to live as they wish to live. And so, I think that you only have the support that you do for whatever venture you have until people are no longer interested in it, or their interests are no longer within it. It's like, it doesn't make it go away, though. There's still the interests of 9 billion fucking people out there, and they've never been able to express it on a more finite, granular level than ever before, or as free as they possibly can in this day and age. And so, I think that that's the contact point where we run into the fallacies in logic here. It's like, you need better computers in order to fucking make something possible. Well, in order to have better computers, you have to have people in order to design the computers and manufacture the computers. At somewhere along the point, you can put all kinds of robots in there and shit, but you still need people to program the robots, and eventually you might even replace them with robots. In which point, I don't know, what's the real interest in maintaining any of it? You're probably not going to live forever. And so, eventually your interests are going to die. So is it then just a program of trying to sort out who will actually survive that kind of thing? It could be. It could be. Personally, I'd rather see it go the other way, where we're learning aeronautics and shit like that via, aerospace engineers live streaming fucking classes and whatnot, and they're not monitoring your reactions to anything for any other purpose other than to maybe enhance the efficacy of the medium itself in conveying to you the ideas and the material and the data that they're trying to. But I think that, because these technologies are available in our hands now, we can actually express them out into the physical world in a way that has probably never been seen before, has never even been dreamed before. Really, who would anticipate the age that we're in? You could literally, if you're 14 years old and you weren't going to school during this time, you could be on YouTube And you could be learning how to fucking program, how to make shit out of fiberglass, how to make shit out of aluminum, how to make shit that makes shit. I mean, extend your capabilities as an individual person so that you're capable of doing multiple things at once. That's what technology is supposed to enable us to do. Not just put a fucking microphone up our ass so we can be fucking recorded in our very thoughts every moment of the day. I mean, that's just a bastardization of the technology. In order to make it worth having, you have to have the individual perspectives focusing on it and reflecting back from it. Well, if all of those are the same thing, if the receiver and the sender are identical in their own self-identity, then you neutralize some of the perspective, because the person's not really thinking in that scope. It's like when the average person looks for a place to live, they're not considering, does this place have enough space for me to grow crops? Why? Because you can go to the grocery store and buy the crop. In modern life, it's not an absolute necessity for you to be providing your own crops. It's not necessary, but it's actually cheaper. It's still cheaper. If you are to take all of the means that you have available to you now in order to grow your own food. You could be growing food indoors. If you were to take that into account, you probably have more than enough space to grow more than enough food to sustain you. Now, of course, that's not in somebody's best interest. It's, some farmer out there is probably lobbying Congress right now to hammer down on people trying to grow crops at home. Well, you know what, dude? Fuck you. You abused your position in the market. You ended up with the supply chain that is what it is because you weren't willing to employ people, or worse yet, you were willing to lobby for things like, property taxes, things that maybe you get some sort of relief or furlough on that the average person, unless they know about it, is completely oblivious to. And again, you might benefit up front in that, you get their property for really cheap and whatnot. But if you're not utilizing it to its maximum potential, which would probably require some employees of some sort, then it's on you. I mean, because you don't eliminate the demand just because you eliminate the competition. And, up front that looks wonderful, but again, when you put yourself in a position where people are looking to replace you, it's not, and not just to a matter of, some sort of choice of fancy or whatnot, but a matter of survival of themselves and their family. I mean, okay, you've overstepped, you've exceeded the bounds of what kind of control you should be having in their lives. Like I said, I think this little COVID thing, if it's going to teach us anything, it's going to be that we need to be growing our own food and trying to expand the number of choices available, at least for food, and really taking a more active role in the market there. Anyway, wait, no, that's not what we wanted to know about. Anyway, so yeah, tokens and PayPal and Intuit and all these guys. I think it's going to be really interesting to see how they intend to evaluate things. And one kind of caution I was thinking about with regard to Square is that they handle a lot of Bitcoin, and that's, I guess, some big percentage of their liquidity is Bitcoin. So how exactly is the U.S. government going to compensate them in the in the event that their people, the people that they loan the Bitcoin to, don't pay them back. Like they send the Bitcoin to somebody else, and that somebody else doesn't fulfill, and so then they're asked out. Yeah, but eventually Square, being the liquidity provider, is going to be on the hook for those Bitcoin. So, either they have the Bitcoin or the U.S. government has the capability of making them whole in the event that Bitcoin gets stolen. Has anybody really thought about that? No, I don't think so. Either that or they're not anticipating the entire regulatory depth and scrutiny that Square and Square Capital and all the adjoining agencies and entities should be placed under. Because I would be willing to bet that a mere cursory review of claimed assets or whatnot would prove out that they're either operating on capital that isn't really theirs, or their customers' coins, or some other shit like that. But yeah, even though that's much harder in crypto, it still does happen. And yeah, I don't think that this is going to bode well for Jack Dorsey or Square or the U.S. government or anything like that. I think it's going to end up in lawsuits, because you either have it or you don't. And when you start loaning it in an option in a market concerning a coin that has that property, that you either have that shit or you don't, and the Fed can't create more of them in the event that you don't have it and have to fucking pay somebody else back now. I can see all kinds of issues developing for all of the entities involved, including you, the end user, that would be wanting to participate in cryptocurrencies, because these huge entities, when you look at it over the longer term, as far as your ability to use Bitcoin on chain, I think it kind of goes away, because they have to put their fucking transactions on the Bitcoin blockchain. They have to initiate their payment channels and close their payment channels on the Bitcoin blockchain. That means they're going to be competing for block space. That means the transaction fees are going to increase. And according to a market where there's entities of that size that are competing instead of just you and me, so $1 or $2 transaction fees, yeah, forget all about that shit. But yeah, so anyway, I had an article that I was wanting to relate back to on that, and let's see here, where the hell did I find that? No, that's not it. Maybe, no. It was much later than that. Damn it. It's one of the reasons I don't really like Twitter. Oh, man. Well, shish kebab. Now I'm having difficulty finding it. Oh, here. Here we go. And this one's on Forbes.com. And this is by Billy Bambro. Visa is about to make Bitcoin spending easier and better. And this is authored on April 13th, 2020 at 3:57 a.m. EDT. And so, yeah, Billy Bambro. So, yes, penis. Bitcoin adoption is something that has somewhat stagnated after a burst of activity following Bitcoin's epic 2017 rally is about to get a boost from a surprising source, U.S. credit card giant Visa. San Francisco-based Fold, an app that offers users Bitcoin rewards, has joined Visa's FinTech Fast Track program and plans to launch co-branded Visa debit cards that gives out as much as 10% of cash purchases with Bitcoin instead of traditional rewards points like airline miles or cash. Fold found around 90% of its existing 90,000 users would, quote, switch spending away from their existing credit card for a card with Bitcoin rewards for dollars spent, it has been reported. Quote, people are not interested in spending Bitcoin right now, but are interested in accumulating it. Fold chief executive Will Reeves told Financial Newswire Bloomberg, adding he thinks the card could bring a fresh wave of Bitcoin adoption. Quote, if people don't understand Bitcoin as money yet, they certainly will understand it as a better reward. Fold currently offers users the ability to spend Bitcoin or traditional currency at the likes of online shopping site Amazon, ride-hailing app Uber, and coffee chain Starbucks by synchronizing their accounts either with an existing card or Bitcoin wallet. The Bitcoin earned by users through rewards is not taxable as Bitcoin is not being sold, according to Reeves. Yeah, Mr. Reeves, I don't believe you've been reading your money transmitter laws. Anyway, continuing, quote, since Bitcoin has no expiration date, the rewards can be used to offset the cost of a consumer's next purchase, saved or withdrawn, giving consumers freedom and flexibility, Fold wrote in a statement announcing the Visa-powered card. The Bitcoin price remains highly volatile, but many in Bitcoin and cryptocurrency community are confident that it will rise this year. Yeah, it's called the halvening. Bitcoin exploded into the public consciousness in late 2017. Actually, it did so a lot earlier than that. It did so by like 2012. Following the price rally from under $1,000 per Bitcoin at the beginning of the year to around $20,000 by December. Since then, the Bitcoin price has roller coastered to lows of under $4,000 and back to almost $15,000 last year. Fold and Visa's rewards-based debit card follows similar but simpler Bitcoin card offerings from cryptocurrency exchanges Coinbase and Binance, though Binance recently scrubbed all mention of Visa from its Bitcoin spending card promotional material. Interesting. Quote, by joining Visa's Fast Track program, exciting fintechs like Fold gain unprecedented access to Visa experts, technology, and resources. Visa's Senior Vice President and Global Head of FinTech, Terry Angelos, in a statement, quote, Fast Track lets us provide new resources that rapidly growing companies need to scale with efficiency. The waiting list is now open for the Fold card that starts shipping in July, with users required to provide a phone number, address, and bank account details. Shit. KYC AML. Fold raised $2.5 million in seed funding from digital asset management firm CoinShares and venture capital firms Craft Ventures and Slow Ventures in September last year. Yeah, and so that's really interesting. Let me see if I can find the Visa link to this thing. Blah 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 blah. Where is it? Reported. Maybe that's it. This isn't too old. But let's see if we can find the source for it. Let's see here. Coinbase becomes the first blah blah blah. Retail cruisers. Reeves. Let's see, no, that's not it. Let me see if I can find this thing. Affiliate debit card spending Bitcoin just follows blah blah blah. Now let's see here. Yeah, this is interesting. Users can already shop directly through the app and earn rewards for using Lightning Network option, for example, while they wait for the Visa program to roll out later this year. Where the fuck is the Visa link? God damn it. Well, maybe it's this one. At some point or another, I'm expecting to find an actual source for this fucking thing. And it doesn't look like I'm going to find it through CoinDesk, because they just keep linking back to their own fucking articles. So let's see here. Let's find the source. Let's see. Bitcoin Fold Visa. Here we go. And this is on Cointelegraph. Visa backs new Lightning Bitcoin new Bitcoin rewards card from Lightning friendly Fold. Okay, that's a little better. As a report of the Fold app. Okay, this is authored by Mary Hewlett. So no penis. The Fold app, a Lightning-compatible mobile app that offers users Bitcoin rewards while shopping, has joined Visa's FinTech Fast Track program. Joining the program will enable the app to launch a new Visa co-branded card, which continues the offer of Bitcoin rewards for purchases made at retailers. Speaking to Cointelegraph, Fold's CEO Reeves said that Visa would be providing the company with financial support and a dedicated team to bring the new Bitcoin cashback rewards card to market. Earn, don't spend your Bitcoin. As reported, the Fold app has so far been offering users the ability to spend Bitcoin or fiat at major retailers such as Amazon, Uber, and Starbucks, requiring them to synchronize their accounts with either existing credit card or Lightning wallet. Let's see here. I'm trying to find the damn... Here we go. Okay, this is as far back as September 24th, 2019. Holy crap. Anyway, I think we can get into this thing really quick. The Fold app is here, and this is by Will Reeves. Today we're giving away free access to Fold's new app and a ton of Bitcoin. Earlier you get access, the more sats you'll get, refer friends, blah blah blah, move up the list, fresh app, dirty fiat. Available on iOS and Android, Fold users can now spend fiat or Bitcoin, get up to 20% cash back in Bitcoin at retailers like Amazon, Uber, Starbucks, Hotels.com, and more. It's simple. You sync your credit card or Lightning wallet and spend via Fold at select retailers online, in-store, or in-app, earning Bitcoin on every purchase instantly. Fold users have earned nearly 100 million Satoshis in the last 30 days alone. 100 million Satoshis. That's one Bitcoin. That's $7,000. Oh, let's see. Yellow app good. Number go up. We give a few normies and maximalists alike the ability to earn Bitcoin while shopping. If all rewards points issued last year, let's see, $48 billion were paid out in Bitcoin, nearly 14 million Bitcoin would have been distributed to 170 million people with a present day value of $140 billion. That's completely wrong. Number one, if you had 14 million Bitcoin, if you had 14 million Bitcoin, Bitcoin would be a hell of a lot more expensive. Continuing on anyway. We're changing the fact that rewards points are issued in the form of restricted airline miles, arbitrary points, or depreciating fiat instead of the best performing asset of the last decade, Bitcoin. But unlike existing reward programs that require users to give up their privacy for points, Fold's new app rewards users for shopping privately. Dude, how the fuck can you do that? Okay, hold on. You already have to give up your phone number, your bank account information, and all that just to get a Gmail account and be able to associate a credit card with it. Okay, and so then you download the Fold app from the App Store that's associated with your email, which is associated with everything else, your real name, your phone number, your routing number for your bank account. So yeah, they've got all the AML KYC bullshit they need on you just via the process of you having a phone that's capable of hosting Fold's app. So anyway, here, users for shopping privately. How can you possibly shop privately? Unless, of course, you've gone an extra step or two in cloaking your identity, which includes steps that aren't actually conducive to the AML KYC process, and I'm not going to go into those here. Incognito mode for everyday spending. Bullshit. We combine Bitcoin, Lightning Network, prepaid cards, and other privacy features to ensure your personal information, payment details, and transaction data is kept private, safe from advertisers and attackers alike, unless, of course, we want to sell them your information. We're a payment gateway, i.e. a third party that Bitcoin was designed specifically not to need, with rewards instead of fees, and rewards program with privacy instead of surveillance. Yeah, bullshit. They're not, dude, you're sending them your Bitcoin, and that's like the only transaction fee that ever is experienced by them. From then on out, and they're probably not even needing that one. They'll probably charge you, make you pay the transaction fee on it. Anyway, continuing on. We're a payment gateway with rewards instead of fees, and Fold is an incognito mode for everyday spending. Bullshit. One of the most private forms of payment available. Bullshit. A good app for a mad world. It's becoming dangerous to go shopping. Every time you make a purchase, you reveal a lot. Personal details, which we will have. Payment information, which we will have. Transaction history, which we will have. And location data, which we will also have. To the retailer, card network, bank, financial apps, and payment processor, and Google, all of which are target of frequent attacks. Of course, there's also the increasing surveillance of everyday payments by advertisers, governments, corporations, and even employers. And it's none of their fucking business. Fold is one more tool in your arsenal to thwart the bad guys by giving us all your information right alongside your ad blocker, private browser, password manager, encrypted messaging, and Lightning node. It's time. Yeah, you're not going to be able to afford your fucking Lightning node. You're going to be competing with these monkeys for fucking block space. Let's see. The Fold family grows. We partnered with experienced investors to pursue our vision of making Bitcoin accessible and rewarding for everyone. Dude, it was already that before, and now you're just trying to make it for yourself instead of them. We want to give the warmest welcome to Craft Ventures, CoinShares, Slow Ventures, Goldcrest Capital, Fulgur Ventures, and others. Also, we think, yeah, okay. Let's see, there's a comment. Let's see here. Love the value prop statement, Will. We're a payment gateway with rewards instead of fees program. Yeah, whatever. Keep up the good work. Yeah, whatever. Yeah. See, the problem with that is that Fold is the arbitrating intermediary here. They get to determine the relative value of things and the exchange rate of things and the conditions of things because it's their fucking service and it's their fucking app. Now, of course, the decentralized quote-unquote nature of this kind of thing, because it's dependent on the Bitcoin app and whatnot, or Bitcoin network, that's not going to relieve them of any responsibility. And I think that's something that people like Mr. Reeves, because they did not involve themselves as early as many of us in crypto have, would not know this about crypto. And it's going to be the big wall that he runs into, because many people have run into that same wall already. And it wasn't because there was some sort of regulating entity that intervened on behalf of users or anything like that. It was because they ran out of actual Bitcoin. And then they were completely fucked. Because everybody was watching the transactions. And that in itself is not going to go away either. Because it is in the interest of everybody that is involved and invested in Bitcoin to be paying attention to that kind of stuff. I know a lot of you don't. I do. And from what I can tell, it is the same as it ever was in many ways, and in too many ways for this kind of thing to just flow over into like some sort of hyper Bitcoinization. You know, where the miners are being paid sufficiently, and because they are being paid sufficiently, it draws more people in, more people's interest into mining Bitcoin, and then it draws all kinds of competition for exactly which BIPs are going to be enforced, which transactions are going to be included into blocks, so on and so forth. And it will be game on all over again. And these monkeys that drop their fucking concrete in the sand, as soon as the tide rises and washes away the sand, they're going to go out with it. And I mean, it doesn't matter what kind of entity you are. If you try to assume the position of custodian in cryptocurrencies, you're going to get fucking run over. Either the regulatory burden that people lobbied for, I don't know why, but they lobbied for it. Between that and pre-existing regulations that created the necessity for Bitcoin to exist as it does, the cost of trying to maintain all of that shit is going to be so prohibitive that you're going to end up going out of business. And I don't care how many people you got doing the business. I mean, I saw somewhere on the other day where there was some whiz-bang app that I remember back in like, and I can't remember the name of the entity, but I can remember them existing back in like 2016, 2017. They got hundreds of fucking employees and whatnot. The other day I heard where they were dropping their employees by 80%, and they had 10 employees. That's 8 more people out of hundreds that they had initially had, or at one point had, and they're down to 2 people. And even so, they're still considering shuttering their doors, and they probably will eventually. Because again, the regulatory demands that these people are asking for, nobody in their right mind believes that they're going to be able to fulfill on them. Even with quote-unquote blockchains, and you know, you can go back and find all the transactions that lead up to the one transaction that happened on the blockchain. Even though you can do all of that, it's still not going to make it trusted enough. Because there is the fact that there are adversarial attackers, and there is the fact that is when you adjust the incentive, when you're putting way more money on one transaction, the incentive grows to try to attack that transaction. And even if it's just to get previous transactions that you owe money to people on to get them canceled, if it's cheaper for you to attack it than to fulfill on those transactions, you are going to fucking attack it. Or somebody will. Because again, you are retweaking the incentive model. And we're going to find this lesson out. We found it out before. We're going to find it out again. And the next time it happens, it's going to be fucking a lot of people's projects inside out. And I know that sounds kind of silly and whatnot, but I'm telling you, this is why you should be invested in projects that are the product of people like you and me. You take the trust component out by the allowance of you to review the code, you to participate directly in running the code, and so you can examine for yourself the efficacy and whether or not it's even worth it to you to do. And those are going to be the things that are going to determine cryptocurrency's value to people in the future, because that's what started it in Bitcoin. And I don't believe that stacking more interest on top of it is going to increase the incentive without drawing people to it that will want to compete for those block rewards and those transaction fees. It's going to be one way or the other. It's either going to be really fucking valuable or it's not. And if it's really fucking valuable, it's going to cause people to want to mine it. The incentive to mine it will go up. And if they're contained from being able to do so, the incentive to attack it will go up. And this is a lesson we've learned multiple times already in crypto. We will see it again in crypto, regardless of the coin that we're talking about. Anyway, continuing on, let's go ahead and throw back down with some music. And as far as where to go, I'm not entirely sure where to go. I think this one, because I hardly ever play this song, but I do love it, so it's very, very short though. Primal Concrete Sledge by Pantera, here on Coin Metal. And that was Skindred with Machine. And it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Wednesday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, I hadn't really picked one out, but I think we can go with something from Slayer because it's appropriate. And so here it is, Live Undead, Last Dance here on... Oh, no, wait a minute. No, I want to go with this one instead. Ghosts of War, Last Dance here on Coin Metal. Thank you again for listening, and y'all have an excellent evening. Good night.